Well, should I invest in a target date fund? I think in many cases, there's pros and cons to what happens within a target date fund. It's been the Ron rotisserie chicken solution for financial investments today, meaning, with that rotisserie chicken that our father in law bought us years ago, it's set it and forget it. And a lot of times, that's what happens when you look at these target date funds. So if you're getting into your 401k or you're already in your 401k, we're going to walk you through the pros and cons of target date fund. Number one of the problems that you can get into with some of the target date funds that are out there is high fees and expenses. So what you want to do is you want to make sure that you do a fee comparison and you look at what the expense ratios are and you compare that to index fund. You can go to a website like morningstar.com and you can type in the target date fund that you're either in and or you're considering. Then what you can do is you can compare that fund versus the index options that are out there and see what the comparison are over time. We had done a previous segment, and previous segment we talked about is the impact of 30 years of higher versus lower fees and expenses. And the convenience of a target date fund could cost you. The problem number two is it's a kind of the approach of the industry of target date fund is it's a one size fits all type of an approach. So it's very generic versus a personalized asset allocation plan based upon who you are as an investor. Those target date funds are really age based allocations and they don't consider your individual situation. Your risk tolerance can vary, not just based upon your age. Income, debts, and your goals matter more than what your birth year is. The problem number three is you have a lack of control. If you look at it, you really can't make adjustments to what the market conditions are. If you're looking at near-term market conditions and you feel very uncomfortable, or if you're using technical analysis and technically there's a breakdown in the market and you want to go more defensive, your target date fund is not making changes based upon short-term market conditions. It also is going to give you then less flexibility for how you rebalance your overall plan. You're really going to lose that type of control. The fourth problem that you have is performance-related issues. If you look at the performance of your investment, what I want you to do is I want you to go to, again, a website like morningstar.com. When you go to morningstar.com, what you can do is you can type in your target date fund. And then if you scroll down a little bit on Morningstar, you can see the performance of how your investment has been doing and look at it in comparison over a 3, 5, or 10-year basis. I have had people come in and they've asked questions like, well, how's the performance been over the last 3 months? Right? Fair question, but if you're looking at this for your retirement vehicle and you've got more than 5 years till retirement, that you're going to have your retirement money invested, worry more so about 3, 5, or 10-year performance. But if you have a target date fund, you could really find yourself in a situation where you could, over time, have severe underperformance when you look at it and compare it to index type strategies. Couple different alternatives that you can have that's out there. The one that we utilize a lot for our clients is called Plan Confidence. So if you look at the website that we have for Plan Confidence, it's really designed to try to do a specific investment selection process. The process that we go through is we break down giving the recommendations based upon future contributions. So when we're looking at future contributions, we're talking about where should you be putting your money that's coming out of your paycheck. And that advice actually can be different than the advice that you get with what your current dollars are. A lot of the times when we're looking at future contributions, we're generally trying to buy some of the things that are on sale and things that could be a little cheaper than putting it to maybe where your current dollars are. So your current dollars, meaning that your large balance that you have, they are ultimately separated out and based upon your individual goals and objectives. They fall into two categories. One is strategic. So when you're talking about strategic, we're talking about large, medium, small international stocks and bonds. And giving advice based upon being conservative, moderate, or aggressive. We also have the ability where we can give tactical advice. And with tactical advice, we are taking into consideration the market in a shorter term basis. And so when market condition looks bad, we might have you take and go more defensive. So in that example, maybe we would have you take and reduce your equity exposure and go with 50%, maybe more in the stable value or the money market account. So a target date fund, in essence, is kind of like, getting in your car and setting the cruise control. And, in situations, setting the cruise control can work. If you're going a long distance down 75, or if you're on the turnpike and you want to set that cruise control at 75 miles an hour, that might work for a long time. But a cruise control scenario or a target date fund doesn't work for everybody. If you have weather that's rainy, even if you're on 75 or if you're on the turnpike, you really maybe want to slow down. If you have bad economic conditions, you maybe want to slow down in your portfolio. And a target date fund is going to go whatever that speed limit is that's going to be set on the cruise control. Adding in the tactical allocation and adding in a more personalized approach would allow you to add gas pedal onto the plan. So when things look great and the weather is perfect, you're going 75 miles an hour. But when things look bad, you're going to slow down and kind of reduce it. If you have a 401k and you're wondering, how should you allocate that plan, and if you're in a target date fund and wondering if that's the best approach for you, let us take a look at your investment choices. We'd be happy to give you some feedback on how to allocate and whether a target date fund is good or right for you.